Hello everyone. In today's class, we will solve one previous year question paper. This is from Mysore University, and here we have to find out working capital requirement of a company. The following particulars they have given from Module Limited, particulars per unit data also they have given. Other information also they have given, such as raw material in store 8 months, material in process, that is work in progress, that is in 4 months period they required, that is 4 weeks, finished goods in store 6 weeks, credit allowed to customer 8 weeks, credit allowed by supplier on credit purchase. Okay, this one is 6 weeks. Time lag in payment of wages is 4 weeks. Time lag in payment of overhead is 2 weeks. 1/4 of output is sold for cash, and that is remaining is on credit basis. In this problem, we have to find out how much credit sales, because that is very important if you want to solve this question. Then cash in hand expected to be 1 lakh. Your estimated the working capital requirement of a company finance the level of 1,50,000 unit of production. That is, they are telling if they want to produce 1,50,000 output, then how much working capital they require, then how much working capital required that is needed in Module Limited, that we have to find out. Assuming that 52 weeks in a year and also wages and overhead accrued evenly throughout the year, that is, it is normal, no mistake, nothing. And assuming 52 weeks a year, by taking this information we have to solve this problem. Formula, okay, formula which is very required for solving that problem, that is, we have 7 formulas. That is, for raw material inventory we have one formula, that is estimated production divided by month into estimated cost per unit into average raw material storage period. Like that for working inventory, okay, working process also we have one, finished goods also we have one, then receivables, that is comes under current asset. For all current asset we have, that is 4 formula. For current liability also we have formula such as trade payable, that is on credit purchase we will pay, no, that is credit purchase divided by 12 months into raw material per unit, that is per unit how much cost. Then credit period allowed by supplier, how much supplier is allowing period to pay him. Then direct wages, labor hour into wages per hour divided by month into time lag in payment of wages. Then overhead also we have one formula, that is estimated overhead divided by 12 months into average time lag in payment of overhead. By taking this formula we have to simplify. Now coming to working note, that is first formula, that is the raw material inventory. Estimated production in this question we have, that is estimated production is how much unit, 1,50,000 divided by what we have to consider, 12 weeks we have to consider instead of months, 12 weeks into estimated cost per unit, that is given in, that they have given in cost sheet, that is 185. Then moving forward to which one, average raw material storage period, that is how much here additional information they have given under other information, that is 8 weeks we have to consider. If we consider that one, if we simplify, that is 1,50,000 divided by 52 into 185 into, that is 8 weeks period they require, that is 42,69,000 to 30.77 we will get. Then if we simplify second one, that is working progress inventory, estimated production 1,50,000 divided by 12 divided by 52 weeks into 395, that is total cost, that is cost, working progress cost we have to consider into 4 weeks holding period. If we simplify, then we will arise to 45,57,692. Then next for finished goods also we have to do consider same, finished goods equal estimated production, that is 1,50,000 divided by 52 weeks into cost, that is total cost is 395 into average storing period of finished goods, that they have given in additional information that we have to consider, that is 6. Then we will arrive to 68,36,538. Then next will be receivables debtor, that is estimated credit sales, that is 1/4 of sale is on cash basis, means remaining is on credit basis, that is 1,50,000 into 75%, that is credit sales divided by 52 weeks into estimated cost of sales is how much, estimated cost of sales, that is 395 will come into average storage period, that they have how much for customer, how much we are providing, that we have to consider. Then Moving further here, 1,50,000, that is one third. Then 3 by 4 will be 1,12,500. Then moving further to next one, that is if you simplify that one, we will arrive to 68,36,538. Then current liability, first one, that is trade payable, estimated credit purchase divided by 12 months. In this question, we have to consider 52 weeks into raw material per unit, that is 185 per unit cost we are incurring on purchase of raw material, into period allowed by supplier, how much period they are allowing, that is in additional information. If we simplify, that is 1,50,000 divided by 52 weeks into 185 cost per raw material into 6, that is period allowed by supplier. Then we will arrive to 32,01,923. Then direct wages, that is estimated credit purchase, or else for this one, if you want, you can also take this one as wages, no? So labor hour, considered labor hour, okay, estimated labor hour or per unit or else per hour, also you can consider this one per hour. Then average time lag in payment of wages. If you simplify, that is 1,50,000 divided by 52 weeks into wages per hour. This one is given in 70. That is in cost sheet they have given first per unit they have given, no, that is 70 into 4 weeks they are providing time. Okay, they are taking time, 4 weeks they are taking time to make payment to their workers. Then next one is overhead. For overhead also, that is 1,50,000 estimated production, or else you can also use this overhead, how much overhead, then overhead per unit amount, how much, then average time lag in payment of overhead, that is 1,50,000 divided by 52 weeks into 140 overhead per unit into 2, that is time lag in payment of overhead, that is 8,07,692, that is over. This is the statement under which we have to consider everything, that is working note 1 2 3 4 5 6 7 working note we have prepared, that amount we have to mention, then we will arrive to total net working capital, that we will arrive by taking one by one we have to write. That is raw material note number 1, that is working note number 1, note number 1, that is 42,69,230.77, so on we have to write. That is note working note number 2, that is VIP finished goods, how much. Then we have to add all these three, that is inventory, that is 1,56,63,461. Then receivable, we only have trade debtors, so we have to write total. Then cash balance is 1 lakh rupees. If we add all this one, we will arrive to total gross working capital, that is 2,26 lakh we will get. Then after taking this one, we will go to current liability. Under current liability also we have 3 working notes. If we add all this one, we will arrive to 48,17,307. Then we have to simplify, that is excess of current asset over current liability, that is 1,77,077 lakh 82,692. Then add safety margin. In this question they have not provided any information regarding safety margin, so nil. Then net working capital is 1,77,82,692 rupees. That if company want to produce 1,50,000 rupees, 1,50,000 output, then they have to maintain around 1,77 lakh rupees. Then only they can produce and go on with production. Hope you have understood this class. If you have any doubt, you can contact me. Thank you.